Good morning, YouTube. I'm back. As much as I'd like to say, I told you so, I won't do that. In the dollar here you saw yesterday, I had this area laid out. Go to my previous video. After price came down, when news hit, I said I want to see these equal lows hit. It came back into the range, consolidated for the rest of that day. In London, had a short spike up above this high. And as you can see, we're crashing. It's 5 minutes before the consumer report. And as much as I'd love to hop in the market, I'm 95% not going to. If you could just see, on the pound here, again, had this laid out, price stayed in it, saw a bounce. But to go back to the dollar quick, when moves like this happen before news hits, like major news, this was that fair value gap that I said price after it takes these lows out could see a bounce in here. Obviously we're not getting a bounce. It's easy to say we're going to go for these lows with such a big move. I would have rather, to be honest, I would have rather have consolidated above these highs before news hit to look for this push down when news drops, but obviously we did it before him. Makes me think that under this low, they might spike it up during news. It could be in here, it could be all the way back up in here, and then another drop lower. Obviously we have these lows back here, where if they want to crash today, because so far, so the dollar's moved already about 115 pips. So realistically, is it likely to see another 200? It could. I wouldn't want to sell the dollar right here. So the reason why I don't want to sell the dollar here is in all technicals, we're in a discount. So you could be looking to buy the dollar. Now, unlike yesterday, I'm not going to sit here and say, oh, I'm expecting this now. Because we've had this movement before news, I'm kind of just going to let the news happen and see what we get. But I will gloat a little bit about my call yesterday. We didn't get the move up yesterday that I wanted during the news time, but we got it the next day, aka today, which is awesome to see. We didn't come down in this area for the euro, but look at that. Left these highs in, dropped down into London, old area of buying, taking out highs. Another reason why I'm not super excited about a continuous move lower is because look at all these lows on these previous days that we've taken out. Low, low, low. We're coming into this low. So that's a lot of stops in such a one-sided move that I don't think that it would be wise to say, yeah, let's just keep selling the dollar. Because when news hits, they could easily push this up. Let's look at an area in here. So without hitting this low, let me just take this off. Let's put this gap. Now the gap is from this high to this low, right? So what they could do is they could tell everyone, oh, you guys think you're so smart, selling before the news because the dollar is crashing. They could jump it up here, 70 pips. And again, my mouse is still wanky. I'm actually going to go and get a new one after this video because I just can't handle it anymore. Now they don't have to come all the way up here. They could push it up wherever they want, but they can get people on the wrong side. Or if I was controlling the market, as ICT would say, I would, when news hits, I would retrace it back a bit, have everyone think, oh, this is the low of the day, get into an area. Let's see if we have, there's a couple imbalances. got 30 seconds, come up somewhere into this area, and then sell it off heavy again. But to everyone who thinks that they know what they're doing right now, and they're like, oh, look how much it's dropped, I'm going to get in now, or the people that want to say this is going to be the bottom, that's what I would do. So let's move these over. These were the areas I was looking for the euro to come up and hit, and news did just drop. I am gonna see, and I've always said it, I don't care what the number is, but I'm just curious on, alright, so the consumer confidence report came in at 102.5, the forecast was 105.9. So probably not good since we missed it by a few points. So let's see, I'll just stay on this time frame. We'll even zoom in a bit. Oh, and I didn't even, so the beast did break through the levels that I wanted to see it reverse at. So instead what we did, we came up into an old area of selling, bodies respecting the open, wicks go into the mean threshold, but we got the sell-off that I was looking for. I'm still looking for it to drop lower. And so far they are keeping it heavy. When news like this drops, or I'm expecting the news to have a big impact on price, I like to see what the first 15-minute candle does. Ideally, if I was looking to trade, I would want the 15-minute candle to retrace into an area of selling that I can expect the market to reverse and then hop in line. There's not much movement right now. See, sometimes when news hits, there'll be an immediate, 50, 60 pip run somewhere, but we're not getting that, which makes sense because we got such a big, heavy movement before the news. I mean, the pound, look at that. See, these are just so obvious in my mind, right? I mean, it's classic, trend line. And then they'll say, yeah, well, look right here, break, retest. Yeah, but normally on a move like this, it won't give you the retest. This time it did, but I just look at those as, yeah, we want to tag those. And a way that you can look to trade off of that, as this is keep going lower, once we break a swing high structure into an area that we're looking to buy, so like here for instance, now the time of day isn't ideal. Like once it breaks that swing high, you don't want to buy it here because the time of day isn't optimal. It's not London yet. Now ideally I was sleeping. I knew that with the 10 o'clock news, I would want to look at the market closer to New York, but this could have been a buy, and it doesn't have to be at the low like cherry picking. You could you could look at this area and say, all right, I want to buy in the fair value gap. It would have went against you 17 pips, but if your stop is below there, which would be about 30, still would have had 13 pips of cushion. Above these highs would have been about 40, 50 pips, and then obviously now, hindsight, you're 200 pips. But that's ICT right there, all ICT. So we'll stay here for a little bit longer. I like to try to keep my videos somewhat short. So as a new channel, I'm not trying to upload a 25-minute video because people have short attention spans. But while I'll shorten this so you can keep an eye down here if you want. You can see price. But why did I think for the dollar that this was going to go lower? Well, I'll just move this to the side. As you can see, the fair value gap. Now, admittedly, right here you have institutional order flow entry drill, just so we can keep an eye on that. Right here. So you could be a seller of the dollar here. Now, obviously, it doesn't take that low out, and it does retrace back up into it. But if you did take that, that's a 55, almost 60 pip move. So if you're selling the dollar there and you buy foreign currency on the other end, just to stay on this page, but if that moves 60 pips, that means that euro and the pound moved minimum 60, maybe to 100 pips. So you would have been profitable on that trade. And then what happens? Low, low, low. We take out these stops, we come up into a fair value gap. Also, this big down candle before an up move, that's going to be a big mitigation block. Now, some will argue that this one is because it is the immediate down close candle, and it honestly can be. You could look for that sell over here. You can say we got this mitigation block with the before this candle happened. There's a fair value gap here. We come back up, sell off, but here is a huge body down candle before the start of the move up. So when price is in here, all this buying is being mitigated. Now, ideally, on this candle, you'd want to see that move immediately away, but I'm not an expert. I'm not ICT, but since it's such a big candle, probably wanted to stay in there to get off their longs and then get into the short themselves. I just know that I didn't want to see it really come back up into this area because there was no reason to, right? These wicks here, there was no imbalance. The only imbalance was here, and it stayed below it absolutely as if it was controlled by an algorithm. It's super weird. So since I don't have any more of a bias on if it's going to go lower or come up higher because of this big move here, I'm going to leave it there. Just very awesome for my call yesterday to be correct. So if you traded today, hopefully you didn't get caught on the wrong side of the market. Hopefully you stole some pips. If you lost, hopefully you didn't get smoked. Thanks for tuning in. Hope you enjoyed. Catch you tomorrow.